What if I told you that the disappearance of 37 million ounces of silver from exchange vaults is not just news for traders? What if it's the same signal that preceded the fall of the Roman Empire? Right now, strange things are happening in the financial markets. Major banks are suddenly halting the sale of silver. A rare phenomenon called backwardation is occurring, where physical metal today costs more than a promise for it tomorrow. This isn't market volatility. These are symptoms. Symptoms of stage 3 of a 4-stage blueprint that is repeated with mathematical precision for 3,000 years. This blueprint doesn't just describe the rise and fall of a metal's price. It describes the rise and fall of world currencies and the empires behind them. Before we decode this blueprint, you need to understand why silver is the perfect barometer for the health of the entire financial system. Unlike gold, which is almost exclusively a monetary asset, silver lives a double life. On one hand, it is millennia-old money, a hedge against inflation and chaos. On the other, it is an irreplaceable industrial metal. Every smartphone, every solar panel, every electric vehicle, every server data center, every guided missile, all require silver. It has the highest electrical and thermal conductivity of any metal, making it essential for modern civilization. And today, these two powerful forces, industrial demand, which is growing exponentially with technology, and monetary demand, which explodes during periods of distrust in paper money, are at war over the same depleting resource. This war is the engine that drives our 4-stage script. This pattern is universal. It worked for the Roman denarius, the Spanish real, and the British pound. The story always begins the same way, with a stage we'll call the foundation. A nation dominates the world through real production. Its currency becomes the global reserve because it's backed by real value and trust. Then, the story enters its second act, a period we can call the Great Deception. The empire discovers it can print money, and the world will still accept it, because there is no alternative yet. It is at this stage that paper promises, futures, ETFs, are created, allowing the illusion of infinite supply. For every ounce of real metal, 10, 50, even 100 paper claims are created. This stage feels like prosperity, but it's a slow poison, corrupting the system from within. This inevitably leads to the third stage, the squeeze, or the reckoning. The mathematics catch up. Debts become unpayable, and demand for real assets surges. The vaults begin to empty, and everyone suddenly realizes there are far more paper promises than real assets. Panic, much like a bank run, begins. Only instead of deposits, people are demanding the metal itself. And this leads to the finale, a fourth and final stage we can call the break, or the reset. The paper market collapses. Exchanges halt trading, change the rules, and force settle contracts for cash, because the physical asset simply isn't there to deliver. The currency undergoes a severe devaluation, and wealth transfers on a massive scale from those who held paper promises to those who owned real, tangible assets. This script is not a theory. Let's watch it in action. In ancient Rome, emperors began reducing the silver content in the denarius coin to fund their wars. Over 2 centuries, it went from 95% pure silver to just 5%. The result? Hyperinflation that saw the price of a loaf of bread multiply hundreds of times, and social chaos that contributed to the fall of the empire. If this first example resonates with you, and you're beginning to see the outline of this historical blueprint, I invite you to subscribe. Because the way this same script played out in Spain, and then in Britain, decodes this pattern even more deeply. Fast forward to 17th century Spain. After the discovery of the New World, mountains of silver poured in. The Spanish real became the world's currency. But Spain produced nothing. It bought everything. Silver flowed through it like a sieve. When the silver flow dried up and the debts remained, the empire went bankrupt 7 times in 70 years. And of course, the most vivid example from modern history, the 1970s. The dollar had just been severed from gold, and inflation was in the double digits. 2 Texas billionaires, the Hunt brothers, understanding their paper dollars were being debased, decided to exchange them for real money, silver. They began buying not just physical metal, but futures contracts. They drove the price from $6 to nearly $50 an ounce. But they did something that terrified the system. They started demanding physical delivery on their contracts, draining the COMEX exchange vaults. The system was on the verge of collapse. And so, the exchange did what the system always does when it's losing. It changed the rules. On January 7, 1980, Silver Rule 7 was implemented, which effectively banned opening new long positions. It banned buying. You could only sell. Then, margin requirements were hiked dramatically. The Hunt brothers, who were heavily leveraged, were bankrupted overnight in an event known as Silver Thursday. But here is the lesson everyone misses. The brothers lost because they tried to fight the system with its own paper instruments, futures. The people who had simply been buying physical coins at $6 and holding them were still enormously profitable, even after the crash. They could not be forced to sell by a rule change on an exchange. Now, let's look at today through the lens of this blueprint. We are in stage 3, and all the elements are in place, but on a much grander scale. First, there's the deep, slow-moving cause playing out on the world stage. The fate of the US dollar. It is following the path of all previous reserve currencies, a $36 trillion national debt that is impossible to repay. Endless money printing to patch budget holes. But the key difference from the Hunt brothers era is that other nations are now acting. China and Russia are systematically divesting from US treasuries. The BRICS nations are actively building alternative payment systems to trade outside the dollar. Central banks are buying gold at a record pace, preparing for a post-dollar world. This is a slow but steady flight from the primary reserve currency. And if the fate of the dollar is the deep rumble of an earthquake, then the silver market is the tremor you can feel right under your feet. It is the visible symptom of this massive underlying shift. The COMEX exchange vaults are emptying at an unprecedented rate. Industrial demand from solar, 5G, and AI data centers is creating a structural supply deficit for the 4th year in a row. We are consuming more silver than we are mining. Premiums on physical metal, the markup you pay over the spot price to get a coin in your hand, are rising. And backwardation, where today's metal costs more than tomorrow's, signals desperation from buyers who need the real asset here and now, not a paper promise. The Hunt brothers failed because they tried to fight the system alone. Today is different. This isn't two billionaires. This is a global shift. This is entire nations like India and China buying up physical metal. These are vital industries that cannot function without silver. You cannot change the rules on everyone, everywhere, simultaneously. History teaches the same lesson, time and again. When trust in paper breaks, a great reset to real value occurs. The silver market today is not just a bull market, it is the canary in the coal mine, warning of a much larger systemic reset. History doesn't offer investment advice, but it does offer a blueprint to understand the times we are in. Subscribe, and we will continue to decode it together so you can navigate the new era that is dawning.